The Minority Market. Episode 29. Support and resistance are human behavior zones. Most beginners treat support and resistance like magical price lines drawn on charts. They believe price will automatically bounce or reverse at these levels. This mechanical thinking causes many false entries and emotional exits. Support and resistance are not fixed lines. They are zones where human behavior changes. When you understand this, charts become a reflection of crowd psychology rather than random patterns. Support forms when buyers repeatedly step in at a certain price area. It is not because the number itself is special. It is because many participants believe that price is attractive at that level. This belief creates demand. When price returns to that zone, buyers remember past success and become active again. The minority understands that memory and emotion drive these reactions. Resistance works in a similar way. It forms when sellers repeatedly become active at a certain price area. This could be due to profit-taking, fear of loss, or past failed breakouts. When price approaches this zone again, participants remember previous reversals and react emotionally. The minority sees resistance as an area of hesitation and decision, not a guaranteed reversal point. One important concept is that support and resistance are zones, not exact prices. Beginners often draw thin lines and expect perfect reactions. Real markets are messy. Orders are spread across ranges. Institutions do not buy or sell at one exact price. They operate across zones. The minority draws broader areas and observes behavior inside those zones instead of focusing on precision. Another mistake beginners make is assuming that support will always hold and resistance will always reject price. In reality, these zones can break. When they do, strong emotional reactions follow. If support breaks, fear increases and selling pressure accelerates. If resistance breaks, confidence rises and buying momentum increases. The minority watches how price behaves during these breaks rather than assuming outcomes. Volume behavior around these zones provides additional insight. When price approaches support with decreasing selling pressure, it suggests sellers are losing strength. When price approaches resistance with strong buying pressure, it suggests buyers are gaining control. The minority uses these clues to understand market intention instead of blindly entering trades. Role reversal is another powerful concept. When resistance breaks, it often becomes support. When support breaks, it often becomes resistance. This happens because human memory remains attached to those price areas. Traders who missed entries or exits tend to react when price returns to those zones. The minority understands this psychological recycling effect. Support and resistance also exist across multiple time frames. A level that is important on a weekly chart carries more weight than one on a 5-minute chart. Beginners often focus only on short-term levels and ignore bigger context. The minority starts with higher time frames and then refines decisions on lower time frames. Another trap is drawing too many levels. When charts become cluttered with lines, confusion increases. The minority keeps charts simple. They focus on major zones where price reacted strongly in the past. Clarity always beats complexity. Here is a simple exercise. Take any chart and mark areas where price reversed strongly or paused repeatedly. Do not draw thin lines. Draw zones. Observe how price behaved when it returned to these areas. Did momentum change? Did volume increase? Did candles show hesitation? This practice trains your ability to read behavior. Support and resistance also teach patience. Instead of entering trades randomly, the minority waits for price to approach important zones. This reduces overtrading and emotional mistakes. Waiting becomes a strategic advantage. Another important mindset shift is understanding that these zones represent opportunity, not certainty. They increase probability, not guarantee results. The minority always combines support and resistance with risk management and confirmation instead of blind belief. Remember, markets move because of people. Fear, hope, memory, and positioning create these zones. When you learn to see support and resistance as behavior zones instead of technical drawings, you stop treating charts like puzzles and start understanding them as human stories. As you continue with the minority market, keep observing how price behaves around key areas. Do not rush entries. Do not chase breakouts without confirmation. Let behavior guide your decisions. This is how the minority reads the market, not through rigid rules, but through understanding crowd psychology and structure. Over time, this perspective will strengthen both your technical awareness and your emotional control.